did you not make $1 billion today, Sebastian? That's all, I just want to know, Sebastian. If you knew where the market was going to go, why did you not make $1 billion today?
Good afternoon, guys. What's going on? And I want to come in here real quick because a lot of people have had questions for me about sorry, a trade came up. I had to take it. We're in a trade right now. We'll go ahead and snag $200. Let me enlarge it so that you can see it. We're going to snag that 250 right there. We're going to get about 4 off of this. We'll lock in 2. Okay, well, we're going to get 400 off of that. I saw that trade coming. I just need to lock that in real quick. But people keep asking me what indicators I'm using. And I'm not actually using any indicators. What you're seeing right here is a 4-hour and a weekly setup, right? So I do my setup at the beginning of the month. I do the entire month's analysis every month on the 1st. And I erase this and I start all over again every month on the 1st. And what I'm doing is I'm checking our ranges. We change ranges every single month. Every couple of weeks we change ranges, actually. So then I draw the weekly range over here on the right hand side for SPY, and I'll explain why I use SPY in a second. And then I have the lower half of the weekly range, which will take you back in time to August 24th over here, right, when we fell down August 24th. Currently we've fallen larger than we fell last year in July. Last year we fell about about $55. This year we've fallen like 60, almost 65. So we fell further than that because we came from a 613. No, yeah, like $65. Anyway, so what you're seeing is not indicators, but I do have indicators on my screen, only on one screen, on this left-hand side screen over here. I have the 9 EMA, the 23 EMA, the 200 EMA, and a balance detector. And what the imbalance detector is, just shows me like a good spot to sometimes exit trades or whatever. Like if we hit a volume imbalance, it's gonna act as resistance. Like it acts as a resistance right here, pushing us down there. But then eventually we broke the imbalance and we finally hit the top of the candle. Now I'm gonna go to a single screen and I'm going to erase this. And then I'll explain what you're actually looking at. These are drawings. All of this purple box and gray box here, all of these blue lines are drawings. So if I right click on the screen and I go down to this and click remove drawings, now you can see exactly what's on my screen. Give me 1 second. And it's a daily 4-hour and 1-hour indicators is what you're looking at. So let's bring them back by clicking this back arrow right here. And then boom, now you can see it on the daily time frame. And on the daily time frame and the 4-hour time frame, it looks like a mess. It looks like chaos and cacophony, but in reality, I have a firm understanding of what it is. And I guess a lot of things that what people say, it's similar to like the Fibonacci sequence, except I'm doing this myself. Eventually you're going to want to get to the point where you can day trade using your own eyes instead of indicators, because what if they took away all of the indicators, right? So even if I wasn't allowed to use my drawings, if they took away all my drawings, I could still find the range. I can find the range with alerts alone right there. Look at that. It was support here. It was support here. It was resistance right below it. It's support while it's above it. So we keep coming down to it, bouncing up, going right back up off of it. 19,600 was support for a very long time. It was resistance several times as well. As we push down even lower, look at that. We got this little indicator right here at 19,000. I expected us to go to 19,000 and stop. We actually hit 19,000 and went even further, right? And so I could do this with just indicators, or I could do it with just notifications. I could do it with just drawings. It doesn't matter what I use, but I don't use indicators to trade. I don't use the 9 EMA to trade. I don't use the 23 EMA to trade. I will from time to time take trades once we cross through the 200 EMA, because usually the 200 EMA acts like a supply and demand. It acts as a very strong level of support or resistance, right? But what you're seeing is I'll find an area where there's a strong level of support, like 19,600. I'll click on the plus sign and I'll draw a blue line. I'll come down to a lower area where there's a break in the candles and something else important happens. Notice that it's usually around even numbers, $19,400. And then I go ahead and if I can get on it, that is, close to it as possible, I right click, and then I put another line. That's another area of importance. This candle wick right here, the $200 mark right there. This candle wick right here. Put another blue line. Then I go through the 4-hour time frame. I go through the 1-hour time frame, and I get it very, very, very precise. All of the important areas get marked out, and that's what you're seeing on my screen when you're looking at my screen. You're not actually seeing indicators. You're seeing me plotting out an entire month's worth of points of interest. And every single day that I trade, I view where are we within the range? What's the most likely target of the day? And you see me trading it like that. But if I go down to the 1 second time frame or the 1 minute time frame that I'm trading, and I go ahead and do this, now you only see 1 or 2 lines. But look at that. We're inside of this range. We touch right there. We go up to the top of this range. We reject, we reject, we reject. We're pushing back down to this part of the range. And over and over and over again, I can take trades off of this and make money. This is worth $610. Over and over and over again, I can take this trade from here to there or there to here and make money. Once we break the range, I scroll down and I start looking for the next range. The next range is the demand zone. So then if we stay below this and we go down, it'll be the demand zone. But then, like, let's say I'm protecting myself with like $200, $250, right? Type it in because it's ridiculous. We try to move it. Say I'm protecting myself with $250 and I'm looking to make 1,000. So 100 ticks. I don't even have to worry about being wicked out if I get in at my blue line. So that's why you always see me enter at these points of interest. I get in at the blue line, we head up here, I get $600. If I stop right there, I get $250. So I get the risk that I'm putting up. So whatever I'm risking is usually what I'm getting out of it. In my case, I'm doing 30 ticks, so $300 or whatever for 2 contracts. Realistically, for the average trader, you want to have anywhere between 6 and 100, right? Ticks. Now, if you're doing 6 to 100 ticks, you're not going to be doing minis. I'm not going to risk $1,000 on trading minis. My ranges are very tight. I'm very secure in where to take my trades from my ranges, and I'm used to it now. So like when it comes down there, I'd be looking to get into a trade to this. Once we break this level, I'm not going to take trades from this blue line anymore. I'm not going to take a trade until it gets all the way down here. So as we scroll down, we're going to come all the way down there, touch, and then bounce right back up from that point. And I'm taking my trades off demand zones. I'm taking my trades off strong levels of support. I'm taking my trades off strong levels of resistance. And we're going to see over the next several moments if we do get all the way down there before I cut the video off. But you can already see where the trend is going. And this is on the 1 second time frame. It doesn't matter if you're on the 30 seconds. It doesn't matter if you're on the 1 second. It doesn't matter if you're on the 1 minute. It's exactly the same over and over and over again. Notice how the 200 EMA is coming down towards this. That's showing me that that's going to act as an area of resistance now. So now we are firmly below this blue line. My trades are from this blue line down, or this purple line up at that point, right? So now we hit that 200 EMA. We did what? We rejected. And instantly you start seeing how to make money off of my blue line. No matter where I enter from, either going up or going down, I'm going to snag some profit off of it because I understand the flow of the market, what we need to do to break levels, you know, what we need to do to flow back. And I got that from training my eyes to see it, not from using indicators. Now the 200 EMA is a good indicator. It's a great indicator. The 90 EMA and 23 EMA, not as much because they change on every single time frame. But what you're seeing me trade with is not indicators. It is just my eyes. Technical analysis, $600 this way, $600 that way. Isn't that crazy? We have $600 this way, we have $600 that way. Look at that massive wick down right there. That massive wick down was worth $370. And this happens all the time. So that's why I'm trading on the 1 second time frame, so that I can see each individual candle's movement and all the tiny micro movements inside of it. But yeah, again, you're not seeing me use any indicators until you go to the daily. I'm drawing all this out. All of this is me. I do the entire range all the way down. I need to know every single important point because it makes me a more accurate trader. And I've made a lot of money today doing just that. I learned supply and demand. I'm in a mentorship, of course, as you guys know. I learned supply and demand. I learned a lot of the other techniques, but I found that supply and demand worked for me. So I just refined it and refined it and refined it and refined it and refined it over the course of 2 years. And now the accuracy that I have with it, coupled with my knowledge of trading SPY and ES every single day for 1.5 years, has turned me into a trader. I'm just mechanical about it. My question that I ask myself every single day is, where are the rich people trying to move their money to? And then once it gets there, where can that area reject? I'm only trying to trade those 2 areas. So at 9:30 in the morning today, right? Let me scroll out a little bit so you guys can see it. At 9:30 in the morning today, we were right here. I'll go to the 4-hour time frame. 9:30 in the morning today, we were right here. All right, 2 contracts. I want to show you how 2 contracts in this 4-hour move. My first move that I took was this 4-hour move right here at 6 o'clock in the morning. So I'm up early all the time. 6 o'clock in the morning. This is $6,000. This is $7,000, $8,000, $9,000, $10,000. These 2 trades right here got me $1,000 each. They got me $12,000 on the day. The next exact move from 9:30 when it pulled back right here. So we're gonna come up to 9:30 now. This is 9:30. Let's say we get in from the exact same point that we got in before. Take it up to the high. It's worth $15,000. $14,680. It's worth a crazy amount of money on just 2 contracts. Now, if you're doing micros, same move. So I do trade micros as well. I got a couple of micros in there. Same exact move, 2 micro contracts. It's going to get you $1,400. I want you to understand how important learning how to analyze the 4-hour time frame is. I take my trades on the 1 second, the 1 minute, the 5 minute, the 15 minutes, but I'm analyzing the higher time frame because the higher time frame rules the move. If over here at 2 o'clock in the afternoon we hit my demand zone, I now know we're going to come out of my demand zone and we're going to continue to go up to the supply zone. We break the supply zone, we're going to go higher, and then there's a higher supply zone that used to be a demand zone. This used to be a demand zone, now it's a supply zone, and then way up here is an old demand zone, or the demand zone that we fell through, now acting as a supply zone. So now that will be the next area that we're working towards. I hope you guys understand that, and that made sense. But everybody has a different trading style. You don't have to copy my trading style at all. I do this so that I can trade on my phone, one, and so that I only need 1 screen. A lot of people will use like 4 screens or whatever. They'll use like this setup. I don't like that. It's not clean. I'll just do 1 screen and have all the lines on it. And then when I'm trading on a smaller time frame, I don't even have to worry about all the lines. They disappear. Boop. They're gone. And now we're going range to range. Back to NQ. So remember, we were going from this blue line to that blue line, and then look at that, right back below that blue line, and then we're going to the purple line now. Isn't it beautiful? Isn't it beautiful? $600 this way, $600 that way. It adds up super quick. It adds up super quick, you guys. But as always, you guys know the motto: take the easy money. Happy hunting. You guys have a great day. This has been another full transparency trading session. We're about to touch my demand zone. I want you guys to see that, and I'm out. Isn't that dope? You'll get really accurate if you work off the 4-hour time frame. You'll get very, very, very accurate. We came within $2 of my demand zone, which we should come down to it and have a reaction out of it. But we came within $2, and from there to there is another $500. That's how I'm doing it. And here we go. We touched it, and we head right back up. It's amazing. You guys have a great day. It's super dope.